The market hits major resistance, then drops. Is this a sign of things to come, or are the bulls coming back? This is Invest with Jacob. Okay, guys, so a couple months ago, we talked about the fact that when the S&P exceeded our resistance box, the most likely scenario was we were on our way to 6,300 and new all-time highs, although some of you weren't so sure. Yesterday, they hit 6,300 on the SPX and then dropped. So now the question is, do the bears continue to take it down, or will the bulls fight back? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, as always, before we jump into the charts, we do take a look at the results of our day and swing trading indicator. It absolutely crushed again yesterday. It caught the top right out of the gate and gave us a sell. If you're new here, we built our own custom trading view indicator. It is good for day and swing trading. We also use it for moving around 401k money in different allocations. It is absolutely outstanding. Right now, let's jump into the chart and take a look at that. Okay, guys, so here we are on the 5-minute SPY chart in trading view. Now, again, if you're new here, we built our own custom indicator. It's IWJ Pivot Point Pro right here. You can turn it on and off. You'll see the buys and sells go away. And it's a super simple forward-looking price action indicator. So why it's different is most indicators are looking back at moving averages, the MACD, the RSI, things like that, things that take time to reverse or switch. We are looking forward at active pivot zones, heavy resistance, heavy support, places we expect the market to pivot and turn. We get it. We look for the pivot. When it happens, you get a buy or sell signal, and it's super easy to look at. It's one chart with buy and sell. You don't have to look at multiple time frames. It covers you use the 5-minute chart, but it's looking at the 1-hour chart, the daily chart, the 4-hour chart. It's looking at all of them. It's looking at the futures charts as well, because it's looking for confluence between all of the markets. And then it gives you a buy or sell signal if everything is moving at the same time in the same direction. This gives us a higher probability of win rate, and it shows in our results. So on the left here, the yellow, that is pre-market trading. On the right in blue, that is post-market trading. And in between is what we trade. This is regular trading hours. Now, right out of the gate today, you can see we got a sell signal right here on the very first bar of the day. And it came in right up here about 627, and it rolled straight down into the 625 area. An easy, no stress, winning trade. It popped up, and we stopped out on this buy signal. And then we took the buy because we always take the first buy of the day regardless of trend. And then it backtested, failed back below this low, and that tells us that we're very likely in a trend day. And that's exactly what we saw. The market continued to trend. So we don't take any buy signals on a trend day down. This was a trend day down. So you had this move down. We ignore this buy signal. It bounced up and backtested the 21 here and a little bit of VWAP. We ignored this buy signal, which would have also been a loser. We come back down. We get this sell signal, and they sell it right down. Break the lows and make new lows. So an awesome day, another crushing day. We give you all the videos you need on how to use the indicator, how to set it up, how to understand when a trend day is happening, how to use that to your advantage and not get caught in these buys that aren't going to work. And it absolutely crushes the market. Guys, if you look at our results on the screen, you can see that over the last 18 months, we have made $70,000 trading 25 contracts based on a $100,000 account. That's a 70% return on investment in 18 months. If you can find that anywhere else, please go do it. But we have it here for you, and we have it at a great price. You can see that Matt chronicles all of our trades. June was another incredible month. He makes sure everything is standing correctly, as recorded correctly. He is one of my paid subscribers. He does not work for me. He keeps me honest and makes sure that the numbers are right. He's actually corrected me a few times where I've made mathematical errors because I'm human. Matt is a great subscriber because of that, and I really appreciate it. And you can see, guys, if you go back and look at the results, we had losing months. That happens. That's part of trading. If you don't understand that, you don't understand trading. And that is the biggest thing, is this makes it simple and it takes emotion out of trading. Emotion is the crusher of traders. They get fear of missing out and fear of losing everything, and they stop their trades, or they get in too late, or they chase, or they do emotional things that are stupid. When you're dating someone and you're emotional because they broke up with you or said something you didn't like, think of all the dumb things you regretted doing. Your drunk phone calls. You're going over to their house when they are with another date. You're fighting over the screaming words you said that you can't take back. Emotion destroys accounts. This takes it out and makes it super simple. You get a buy, you buy. You get a sell, you sell, with a few small rules that are easy to understand, guys, it's having people win for the first time in the market. You can see on the screen, they call it a cheat code. Guys are taking off work to play golf. One guy turned 4,000 into 32K. He probably oversized his trade, but he still did it using our indicator. If you're struggling to make money in the market, or you don't understand day trading, or you think the market is fixed or manipulated or rigged, this is the tool for you, and here's how you get it. There's a link down in the description. Go ahead and click that link. It'll take you over to our webpage. Once you're there, check out our membership plans area. Scroll down, and you'll see our trading view indicator. It's the third one down. It's $59 a month, $590 for the year. So you get a 2-month discount for free, okay? And you get a 30-day money-back guarantee, because that's how much I love it, and that's how much I want you to have it. I want you to try it for a month. And if you don't like it or it doesn't work, then simply tell me and get your money back. You can paper trade it. You can just watch it work. And you don't even ever have to risk a penny, because you'll get your money back that you purchased it for. And if you paper trade it, you can just see how it works. And if you love it, keep it like most people do and continue to make money using it. Now, here's the really cool thing. I'm going to be live tomorrow on YouTube. We're going to live trade this indicator. You're going to see it in action. Last week, we had a great week. Had a great trading week and traded live. You can check that out on my YouTube channel. I want you to be a part of it, guys. Go ahead and click here. I'm going to give great discounts on the live tomorrow, so if you want to wait till then, do that. Now, before we jump into the video, everybody liked my midday call so much today. It goes over all the stocks. I'm going to use that one today, so I hope you enjoy it. This is a one-time deal where I'm going to let you in on our midday video. So here is that. Okay, so trend day down. And just because they gap up, guys, doesn't mean it's not a trend day down. I saw somebody ask, why would it be a trend day down? Well, because they broke the pre-market low, they back tested, and then they broke down again, and then they broke the actual overnight low, back tested, and broke down again. So still a trend day, still moving down. It's a failed breakout as of right now. So I told you at the start of the day, we were at huge resistance. We should be looking for this to break down. The ADD was breaking down. It's negative 1,500 right now. The volt is very negative. Everything is negative except the NASDAQ, and that is essentially being bench pressed by NVIDIA and the Mag 7 overall, but NVIDIA especially. And we'll look at NVIDIA here in a minute, but NVIDIA hit 172 and has backed off of that. And that's what we've been talking about for a while now, honestly. So should be no overall surprises. You know, I said 6,300 SPX was the number to watch. They hit 6,302 and rejected pretty strongly. And now we're still following through to the downside. We do have some key levels here that they just hit off of. 623 is a high volume level. I'd be looking more for 621 now that we've gotten down to the level we're at, even though 622 is technically a high volume level, and the weekly low is right here as well. These are two areas of interest to me, as well as the one-day minimum, which is at 621.09 right now. You also have another one down here around 619 and change. So this whole area between 621 and 619 would be my overall target for today if they continue to break down. Now they are, again, support here. They can find a bounce, and the NASDAQ is not quite playing along as well to the downside, so we'll see how that all works out. If we get any follow through from the NASDAQ into the afternoon or tomorrow, then this can crater pretty quickly down to 6,200, which is about another 100-point drop from here. So we'd like to see them come down. 6,250 is a pretty prominent call wall on the ES, on the SPX. So they're right around there right now. If they push through that, then we can get into some negative gamma and start to accelerate again to the downside. So we're starting to see some selling. You can see right here, a huge selling bar. It was bigger than the open. Good volume today on the open. On the SPY, if we go back and look, we got to compare opening candles here. So if we go back to yesterday's open, more volume on several of the bars there at the open. And then if we go back a little further, more volume than this one as well. So volume uptick on a downturn off of a high, that's a good thing. That's what you want to see. It's not a huge volume uptick. I don't want anybody to think that we have incredible volume yet, but it is a volume uptick. So all good things to the downside right now. You also have on the daily, so we'll go over to the ES now. on the daily ES. So you have now made a supersonic high here all the way up in the 114 zone, the highest ever on the MACD. Then you've got a negative cross, you've got negative divergence, and you have a negative cross. So that lines up well. It is certainly possible. I mean, we were looking for 6,400. The ES hit 6,343. I mean, that is certainly possible that is all of wave 5. That is a distinct possibility that we should be aware of, that they have now made a high that is above this high here by a fair amount and above the previous high that they made. Again, July has never printed the high of the year, so I'd be skeptical that it's the all-time high. I'd still look for the potential for them to pull back and make one more high. So I'd be looking at 6,200 first, then 6,100, 6,160, then 6,100. Let's zoom in just a little here so we can see better. I am still of the opinion that we are potentially in wave 4. So you made a high, and then you have this kind of ugly ABC for A. I'm sorry, you have A, and then this ABC for B, and then you have C down that we would look for towards 6,200, and then we'd look for 6,400 plus after that. So keep those things in mind. We haven't broken any critical support yet, as far as bigger picture stuff, but we are still in a very ugly pattern to the upside. Questions on the ES? Okay. NASDAQ. Again, so the NASDAQ is a little bit of the fly in the ointment for the shorts. But the NASDAQ has made a nice new high up here at around 23.2. They do have a much better build off of this potential being I would look at the NASDAQ as a potential wave 4 flat as well, but it can also be that this was one as a diagonal and then 2 pulls back, sets up deep. And then you've got 3 breaking out, and then you'd have 4 and 5 into 23.50. And then you'd look for a very sharp reversal after that. Or 23.500, not 23.50, sorry. Breaking down below this low would tell us that we're likely headed to the 22.6 area. So this 22.8 is support. That drops us into 22.6 if they can't hold. It is possible that this is still a B wave. It's also possible, as I said, that this wave 5 is taking on a diagonal shape, and we would look for that as well. So that's exactly where we're at on both the major indexes. Any questions? So overall, if you glance at the right here, everything is red. RTY is substantially red, everything except in Q. RTY leading strongly to the downside. You have IWM, or I'm sorry, YM also down fairly, almost 1%. The transports and banks are well over 1% to the downside. Remember, JP Morgan and Goldman Sachs, I think? JP Morgan for sure, and another bank reported today. And that is interesting to see the banks down 1.5% after their report. Remember, the banks are much weaker than people think. There's so much misinformation about banks out there that aren't looking at their bottom line, that aren't looking at their debt sheets, that aren't looking at their delinquencies. Credit card delinquencies are climbing like crazy. Car delinquencies are climbing like crazy. Commercial real estate is out of control, how much default there is on it. Regular real estate is catching up. It's not where it was in 2008, but it's still pretty high and pushing. It's getting worse. Leverage is out of control to the upside. There are so many overweight things that are, you're essentially walking over a cliff on a broken glass bridge, and at some point across this gorge, that glass bridge is going to break. And when it does, it's going to be a pretty sharp move. Now, that keep all of that in mind, and then know that I said we still have upside available here. And quite frankly, I think we still will see upside. But you should always know the bigger picture in the back of your mind. Doesn't mean we're playing to short right now. We will wait for the cracks to break, and then we'll short heavier than that. Right now, we're just trying to catch a small drop and then potentially get long again. So that's kind of where we're at right now overall. NQ still up. We need this to come back down before anything else happens. Yeah, I mean, you're not necessarily come back down, but NQ is, you know, off of its high. Let's see, it was at 23,222, so it's down 120 points since the open, 112 points since the open. That's about 0.5% or so that it's dropped off. And again, it's not going to fully drop until NVIDIA does, and it's not likely unless it's later in the day that you're going to see NVIDIA start to drop. Joe, do you have your audio back? Because nobody else has said anything about the audio. I think the audio is okay. Wells Fargo was the other one, yeah. JP and Wells Fargo. JP Morgan is down 1% and Wells Fargo is down 6%. That is, I didn't see what Wells Fargo said. It doesn't really matter what they said. I know what I'm looking for and I know what's on their balance sheets, but dropping 6% is interesting to me. I know what I saw JPM's report. They had some really kind of fudged numbers. They had 54 cents of extra EPS in there for buybacks and other things. And then they, even though they made a profit, they had to, their profit was significantly less than year over year. I think it was, or quarter over, one of them, year over year, or quarter over quarter. Is the swing short still open? Yes. One thing on the ES, if we zoom in a little further here, I believe it's 62.85 or so, will be a pretty major zone, about 12 points lower than we are now. 62.85 right here, right there. Yeah. So this, I guess it's 78. They made a little lower. I was going off this upper resistance or support, I should say. They're coming right into this 78, 65, or 85 zone. That's going to be a very important zone for the bulls to hold in the short term if they're trying to keep this positive. So you would want the bulls to hold and do that. But if they break down below that, very likely we're going to, test 62.60 and ultimately 62.50 and below. We've known what is on the bank's balance sheet for a while, years at least. Is the average market participant that naive? 100%. Or do they ride momentum while still knowing things are bad beneath the surface? So you have a couple things there. Those are good questions, Matt. Most investors don't know anything. And I don't mean that to be mean. I just mean they truly don't know anything. They know that their friend told them Apple was a good stock, so they bought Apple. Most investors aren't day or swing traders, and the ones that are not successful in most cases. Most investors are news-driven people. They only read the headlines. They don't understand the bigger picture, and they when the market's rallying, they're the ones that say it can never go down, and when it's cratering, it can never go back to all-time highs. Context and the ability to understand the big picture are lost on most people. Everybody is day to day, minute to minute. It's like life now. You want everything instantly. We have gone from an era of waiting for the newspaper to be delivered, opening the newspaper and looking at the stock prints, to being able to see every single second of the stock market. And that is uncommon, but what has happened is you've accelerated the mindset of people. You have put them in this idea that only 10 minutes matters, and they get really hung up on a 1% move up or down. So most investors are incredibly naive. To understand, most people don't know that the Fed is bankrupt. I mean, they're not fully bankrupt, but they're billions of dollars in debt. Uh, most people don't know that the bank sheets are where they are. Most people don't know that leverage is out of control. Most people don't know. And when you get leverage out of control, you get flash crashes, and then you get margin calls, and then you get more flash crashes that can turn into full-time crashes. Most people are unaware of anything other than what their friend told them, what CNBC told them, or what the Wall Street Journal told them. And they don't talk about those things because their job is to pump the market. I mean, if you ever watch CNBC, it's like, so CNBC is like, if you're a Republican, it's like Fox News, and if you're like if you're a Democrat, it's like MSNBC. Their job is to fill you with butterflies, and they have the same panels every time. It's three guys who are uber bullish and then one guy who's bearish. And Tom Lee is going to tell you the market's going to 25,000 every single day if you want him to. So yeah, I do think investors are incredibly naive. They don't. I even think professional investors at points are naive. They get really caught up in headlines and different things, but the big time guys, the guys that really know what's going on, those guys understand where we're at as a overall market, and it makes a big difference. They also understand that we are in a bull market till we're not, so there's no reason to be jamming in tons of shorts until we see some reason to. They're the ones that know that while it can be advantageous to take a couple stabs at a top or a bottom, it is also generally hard to do. So that's why we look for setups. We don't try to catch exact bottoms and tops, although sometimes we do. Generally, we want to see setups. So yes, I do think, long answer there, very long answer, sorry. But yes, I do think that investors are that naive, and they're all fear-driven. Fear of missing out, fear of losing everything. The actual thing about it is the market is driven by economic data. That is true. However, it is so disconnected from the market that people don't even know what it is. Everybody reacts to the market with emotion. And that emotion is what drives the market. However, when things break, it is due to economic circumstances, the housing market. When the housing market broke in 2008, the market tanked. And then fear took over and everybody crashed it. So it is driven by economic data. It's just not connected to the market in a way. Everybody reads a headline and says, oh, CPI was high today. Market must be tanking. Well, it is unless you're in the NASDAQ. It's not tanking. It's going down. And then they think that matters for another 10 days or something. It doesn't. No one cares. No one cared that it was high today. People will tell you that I guess there was an H20. I don't even know what H20 is. But I guess there was some thing for NVIDIA overnight or yesterday or some whatever that made them go up to 172, and they'll tell you that's why. I will look at NVIDIA in a minute, but if you've been here and listening, I've been telling you that 172 on NVIDIA was where we're headed long before any of that stuff happened. So they're going to associate it to the news, but the news is disconnected from reality and the market is more connected to longer term things that as long as they're still holding up, they can still keep putting cards on top, but when the wind blows and that house of cards starts to go, it all goes. So economic data matters, but it takes a lot longer to kick in than people realized. So inflation started in 2020, and I started saying then inflation is going to be out of control, and Jerome Powell was saying there's no inflation, and I said, well, then you're not buying anything, because I can tell you right now, on my commute to my daughter's school, I could pick up a McDonald's breakfast for $4, and now that same breakfast is almost $8. That's 100% inflation in 5 years. 100% inflation on McDonald's. If McDonald's is up 100%, guess what else is up? Everything else. And guess what never happens? It never goes back down. They're never going back to that $4 menu. I remember when full value meals were $2.99 when they first came out. So the people even running it are either liars, which I think is probably more accurate, or manipulators. So when Powell's telling you there's no inflation, that is a either blatant lie by the quote unquote smartest economic man in the country, or it's manipulation to help elections, to help fear, to help people not panic. I think it's just a blatant combination of both. Or the third option, which God help us if this is true, he's the dumbest person I've ever met or seen. I've never met him. Because if you couldn't look at the numbers that were coming out and the amount of money that was being poured into paychecks going out to people because of COVID, and you couldn't figure out that, and the supply chain issues, and you couldn't figure out that inflation was coming, I'm not sure who you are in the economic field. It was so simple to see that that was coming. And if you've been here long enough, you know that I was stomping around saying, how can they say there's no inflation? This is crazy. So yeah, sorry, I got really off on a tangent there about the naivety of investors. My wife is a bank president. She keeps saying dark days are coming and it'll be worse than 2008. She is probably 100% accurate. I mean, the Fed, this is what the Fed does. The Fed is the most useless entity in all of economics, by the way. They run stress tests on the banks and say the banks are fine. And Bank of America and JP Morgan both said, not exactly how you did it, though. You guys ran kind of a surface level, everything's okay because we got good balance sheets stress test. But if you look at what we actually have deeper down, we can be in a lot of trouble real soon when all this stuff matures. No one is talking about the stress test. Well, see, there you go. I just got to the next comment. We were talking about the same thing. I mean, they literally wrote off that, I think what was it, the third and seventh biggest banks in the country 2 or 3 years ago went under. I mean, that's kind of a big deal. And they were just like, you know, it's all right. Everything's fine. I remember my dad reading Baron Print to find stocks. Yeah, for sure. Do you ever consider gaps as targets or fibs primary? Yeah, absolutely. Gaps are very important. The market respects them for whatever reason. They don't like them, meaning that they will eventually fill them. In almost all cases, like 97% of the time, gaps get filled. So yeah, no, gaps are a pretty legitimate target most of the time, at least to take profit or to kind of understand where they're headed and see if they bounce. Because generally it's prior support is one of the big reasons. I mean, I do know why, but the fact that it's such a cult phenomenon is a little interesting. But you have a support level, they gap up overnight, they start heading back. Well, if they break upper support, they're going to come back to where major support is, which is the gap where they drove up from, their back testing, and then they go. Or they break through to the downside or upside, whichever way they're going. Do you feel if inflation remains consistently around 2 to 3%, wouldn't stocks continue to go up, considering that EPS would also go up? Few things about that. One, I don't think inflation is going to stay at 2 to 3%. I think what I call it reflation. I think reflation is heading back at us pretty quick. Two, there will be so many other economic factors besides inflation that matter that there's going to, that no, I don't. And then three, because of the way I believe, I think that structure matters more than that. And we are hitting the tippy top of a lot of structures. there are a lot of things that people are talking about that could be positives for the market that I see as negative. For instance, a lot of people want Jerome Powell to be fired, which I'm okay either way on that. It doesn't really matter. Again, I think the Fed is useless. I think Jerome Powell is a puppet, and I think whoever the Fed chair is likely a puppet. And if he gets fired because Trump wants rates down, I think that everybody thinks that's going to be good for the market. I personally do not. I think that'll be worse for the market than people think. Market doesn't like chaos. Firing the Fed chair mid-presidency. If he would have replaced him right away, that'd be different. Mid-presidency, when things are going good, and then you're throwing a tantrum and fire a guy, the market will not like it. They won't. Is this still a B wave from April bottoms? What would a C wave look like? I think it's really unlikely that this is B. I have it on the chart still because it's possible, certainly possible. And if we get a 5-wave structure down, which we could still from here get a 5-wave structure down there, they're working on it. That's what it would look like. It would be 5 waves, but I think it would be severe. I think it would be much more severe than people think because it's coming off of a B wave that's in a diagonal of a diagonal. So it's pretty ugly overall, the structure, since not just this April's lows, but October of 22's lows. And that's what people are used to seeing diagonals in smaller senses. So if we look at, let's just say this is a diagonal here, which it could be, right? Then they're just going to retrace back to here, 6250 or beyond. I mean, they can go further, but they're going to do it in like a day. Well, people don't understand when you're at 30, I think it was 3,500 or roughly was that low, you go up to 6,000, they still are going to retrace like this. Once the bow breaks, the cradle falls, and down comes the market. Bulls and all. There you go, right off the. I should be a rapper. That was amazing. But I doubt it's a B wave. It certainly could be, but in either case, I think it's going to be a sharp decline because the bigger picture, even if it's finishing a bigger wave 5, bigger wave 3, we're finishing it as a wave 5 of wave 3, I should say. We're finishing it as a diagonal, and that diagonal is going to retrace sharply. Continuing on gap question, is there one time frame where it's more important? No, just the level is important on the gap. And I mean, you can look at smaller time frames if you're looking at a gap for one day, like they gapped up today, right? So if we go to the SPY, we'll look at an example. Today's a good example because we had a gap. If we go to the SPY here, so they gapped up and immediately started back down. I don't have any of my stuff on here. And as soon as they broke down below VWAP, that was a red flag right there. And then when they popped up and then came back down and broke the low. So it only popped up a little and then they broke the low that they established. That's a red flag. And then once they got to here and failed VWAP again and came back down and broke this low, that's 100% going to be a gap close. Now, half the gap had already been closed at that point, so I understand if you're saying, well, that was late, but those are the kind of supports you're looking for. You also had this prior level that they failed, so this is a failed breakout is what it turns into. They made a high, failed it immediately down, and as soon as they failed below VWAP, that is your first red flag that they're not going to hold this. And then when they came back up, tested VWAP and failed again, tested, failed again, and so on. That's when the trend day kicks in, and we're looking at a trend day down. So they came down. The reason this is major support is because it's, well, major support. If you look at the chart on the SPY, they came right into this area that has held 1, 2, now 3 times for now. They're back testing some levels, but yeah, it doesn't matter the time frame. It just matters what they're breaking through and what supports are breaking. Lots of questions today. I like it. Interactive. Inflation never went down. They fabricated the matrix they're using. If it was the old matrix, we're at 5.5. Well, that's the thing. So the CPI number cracks me up because they're like, oh, this is inflation minus food and energy. Oh, you mean the two things that everybody uses every day? Hmm. How are those doing? Are they down? Because my heating bill isn't, and my grocery bill isn't. So my gasoline bill isn't. Those seem really high, and those are the ones I spend the most money on. So who's that affecting? Hey, used car prices are down. Cool. I can't get any gas for it. In my opinion, the stock market has become the safe haven for Americans. Nobody wants to leave money in the bank when you're getting 10 to 20% return on your money annually. It kind of scares me that almost everybody I know has dumped their market into stocks and cryptos. Well, crypto again, so we have transformed as a society worldwide, really, from the internet has really changed things. We've transformed from earning things to needing and wanting things instantly. Um, and jealousy and that's not new, but the you used to have to get up in a day, go to your job, get dressed, take a shower, drive somewhere, go into a building, interact with people, earn money at that job, drive to the grocery store, pick up every single one of your groceries, put it in a cart, put it in your car, drive home, unload the groceries, cook dinner, and put a little bit of money in savings or in the market or in your 401k and wait. Well, now you're seeing things like Bitcoin go from 600 to 120,000 in 10 years, making people overnight millionaires. You're seeing Uber Eats and Amazon make it so you never have to leave your house for food or groceries. You're seeing things like work from home, so you never have to leave your house for that. You're seeing things like social media, so you never have to interact with people. And you get instant gratification. You get the ability to be a jerk, and you want these overnight things to happen. It's why everybody's a failed trader, because they want to be a millionaire tomorrow, and you're just not going to be unless you're super lucky. I mean, you can get lucky. You could have got in. I mean, I could be a I could be 100 millionaire. I thought about this the other day. It makes me sad. Sorry, quick story. I know this call is dragging on and we're still not even into the stocks yet. I had Bitcoin at $600. I really did in 2016. And I had 12 of them because wasn't sure much about it. My friend was heavily into it. He knew what it was. Um, but more important than that, I had like, what was it? 10,000 Ethereum at $10. And Ethereum went to whatever it went to, $2,500. Well, I sold all my Ethereum and put it into Bitcoin, which I'm not mad about. It did fine, even though I got Ethereum at $10, and the return on it was actually better than Bitcoin at the time. Um, Bitcoin went to 20, then started crashing. I sold at 14,000, and I thought I was a hero. I am a hero. I'm not mad at that. Uh, but then I looked at Ethereum and I thought, oh my God, if I would have taken and all my Ethereum and just held that until it went up, sold that, waited till Bitcoin went back to 3,000, put it all into Bitcoin and let it go up to 120,000, I'd have like $150 million. No joke. And that total investment was like, I don't know, $120,000 or something. Um, so I could be one of those people that have $100 million to my name. I mean, I'm doing okay. I'm not mad, but uh, things like that do happen. You can get lucky, but that instant gratification has changed the way people think. And you're right, Eunice, that everybody thinks that you're getting 10% every year, and that's what it is. I see this thing on my Instagram all the time, for better or for worse or whatever it's called. They're saving their savings. People, and all they do is they buy the SPY and the NQ or the Qs, and then they just let it ride. Fair enough. I mean, if you're a long-term investor, there's nothing wrong with that. I don't want people to think that that's a wrong strategy. But we've grown so accustomed because this bull market's been so crazy, especially since 2020, to these huge, incredible gains that now people are like, oh, well, I'll put way more money into it. It's the reason I didn't put more money into Bitcoin and Ethereum is because it was speculative. It was something that I was scared could easily go to zero. And now everybody's all in. And when you're all in and it fails, that's when fear kicks up the most because every penny you have is invested. And when the investment starts to fail, you get scared, so you sell, the acceleration happens, and the crashes happen. Again, I've said this many times, most investors are either too young or too new to investing to understand and remember how crashes work. They don't remember that there was a 9-year correction from 2000 to 2009 where we lost 66% of the value of the stock market, of the SPY, or the ES, whichever one you want to look at, SPX, any of them. Went from 1,500 down to 666. 900 of the 1,500 points gone in that time frame. I think we're on par for a similar thing, only bigger. People forget about those things. All right. There's all the comments taken care of. There's all my tangents and stories and soapboxes. They're bouncing off this support level, not shocking. I could even argue we have 5 down here, but that's not necessarily what we're looking for anyway. So what we need to do now is go through the rest of the stuff. So supporting evidence. The market is down, green and red if you're talking about the NQ and the ES. So what's our supporting evidence? Well, our supporting evidence is RTY is getting hit pretty hard. The Dow Jones Transport's getting hit pretty hard. The bank's getting hit pretty hard. The bench press of the market, if we look at the Mag 7, you have NVIDIA, SMH. SMH is soaring because of NVIDIA. So you got, that makes that a two-pronged approach there. You got 2% and 4%. Meta's down a little, Microsoft up nicely, Netflix down a little, Amazon up a little, Tesla down decent, or a little, I guess, and then Apple and Google up okay, doing good. So you have a mixed Mag 7. They're bench pressing the market right now, keeping it from collapsing, but the overall supporting evidence is in fact negative. If the Mag 7 gets on board with selling, which we're gonna look at NVIDIA in just a second, that will trigger a quick sell-off. Now, I don't think we're gonna crash yet. Talked about that many times. I don't think we're gonna crash yet, but we are due for a pullback towards 6,200. Whether we get that first or not, that's up to the market. But the supporting evidence says we should be getting that. NVIDIA. Zoom out a little bit. See this red line right here? That's at 172. We'll zoom out and we'll see that that red line is our fib that we've been talking about, saying 172 was the number, or 2618. You have a pretty decent 4-5 here. 4, and then also a 4-5 of 5. So you have a pretty decent completion of a move. You have a target hit. Does that mean that is the end of NVIDIA? It's never going higher. It doesn't. It can definitely push higher. The next target would be close to 200, a big round number, which could easily be attainable. It's the biggest stock in the world. We're going into earnings season. I could definitely see them, do something like this into 200. That would be the next number. But we have hit the target that I said if they break out over 150, 172 will be where we get to. I said that way back here. I hope you guys remember. Right now, again, you have a decent 4-5 here, and then another 4-5 up here, which is what you want to see. So NVIDIA pulling back off that 172 zone, we will see if they're going to press. Can they press? Absolutely. 201 being the next target. If they break down below 154, actually, let's go back below this high. This high is at 152.81. If they start to truly break 152.81, you do have some heavy support at 170, 147, and then after that, it starts to get downhill in a hurry. Nobody else is too crazy today. SMH blow off top as well. They've made their new high. Our target for them was 296, the 1236 actually, 310, 296 to 310. They are tracking with NVIDIA pretty well. They have made new all-time highs off of this low. So we do have potential for them to hit between 296 and 310 higher. But again, I would say we're likely to hit the 296, if not 300 zone, and then 310 would be a little bonus push up over. Because again, I don't think that we have topped yet overall. I think we're still due for one of these, and then we'll see how it looks after that. Nobody else in the Mag 7 do anything crazy. Everybody's still kind of shuffling around. Gold, nothing to really talk about there, but we'll go through it. Consolidating, flagging. We've been talking about this for, well, since April, and we are now in wherever we're in, July. So we've been talking about this for months. Gold's been consolidating. We're looking for it to break out over the previous highs, and if it does, it's going to squeeze, with the next levels being on the bigger picture. I do this so far away sometimes. Bigger picture being 341. They basically hit the 1764, and since they hit the 1764, it is possible we overshoot 341. The 2618 is generally the next target. That's 400. I think that's a little high. I don't think we'll get there, but 350, 360, 370, somewhere in that range is certainly. Well, you have 395 to 360 to 395 as your targets on gold. That's the bigger weekly. One of these is the weekly, and one of these is the shorter term. I think this is the shorter term, and I think the weekly target's 395. So between 350 and 395 is where I'd be looking for gold ultimately, should they break out over that flag. They certainly can pull down, make a deeper wave 4 before they do that. Silver, just same thing. They broke out, they're flagging up here, headed towards their prior all-time highs. I do think they will get over that. Our target is 50. I do think it's very possible we get higher than 50, but 50 would be the overall target of where we're at. You can see silver, it broke out over these highs, and it's, struggling a little bit over here with this resistance. The next resistance is up around that 37 zone, which is what we're looking for. And then we look for that pullback and then continuation up to 43 and then 50 overall. Nothing's changed on those. Bitcoin hit 120 and change and pulled back, not surprising, or 125, I think. What was the high? 123. So it got to the first level or area we're expecting, that 1.0, rejected 125, which is a round number, not surprising. Not a big rejection, but a rejection nonetheless. They need to basically hold back that 110 area, the prior high. They can backtest that and push. Again, 135, 140 being our 125 to 140 being our targets up to the upside on Bitcoin. The 30-year is over 5% and climbing. I told you that this was a, well, if we zoom in to the daily, or let's go to the 4 hour or 3 hour on this. I told you this was an ugly decline and they would likely buy it back sharply. They did, and they're now reapproaching those highs again. I would look for them to probably, since this is, let's go back a little time here. Yeah, this is their first time back into this area. So I would look for them to come up and chop here, potentially. So they come up and do this, but I would ultimately be looking for that on the 30-year, and that's a problem. Over 5%, guys, 5.01. Over 5% on the 30-year makes the Fed panic. It makes the markets panic. When the Fed panics, the markets panic more. So keep that in mind. I did throw JP Morgan on here because they're the #1 bank. And should they get back below this 260 area, that is a major warning for all the banks. You have a pretty decent 1, 2, 3, 4, 5 here. So I'd be very cautious if JP Morgan breaks down below 260, this zone right here. Let's see, NEM. So this is a pretty decent, let me look at this real quick. Yeah, this is a pretty decent 5-wave move. So they came up, you had your 1, 2, so you have 1, 2, 1, 2. They hit the 1, 3, 8, 2 for 3, held the pivot for 4. 5 of 3, 4, and 5 up to the 1, 7, 6, 4. Certainly possible that they hold here and then give you a 5 up to 63. However, if they break back below right here at 53, that would be a warning sign that they're in 2. So this looks to me so far, what this looks like is a bigger 1, 2, and then you're looking at this as a potential 1 of 3. Then you'd look for this as a 2 of 3 and then go. A break again below 50, what is that? Oh, 53 right here would be a warning sign that you're in, you know, a little bigger pullback in 2 of 3 and then breakout in 3 of 3. But I do think they are due a pullback, and they're in the middle of one right now, so we'll see how they pull back off of that. But if they break down below this line right here, basically 52, they break down below 52, that would be a problem, but I'd still look for them to hold. They're going to need to hold. If we look at this, 2 of 3 should not be too deep. 618 is generally what you're looking for. 46, so you shouldn't get much below 46 overall. If they do, I'd start to worry about them breaking down. They're the same as gold. I figured they would be. They are flagging. They came up. They are flagging as long as they stay up here above this 50 zone. They're trying to break out. And if they do, let's see where their fibs are. Yes, they hit the 1, 2, 3, 6 here. So currently, I could definitely call this 3 of 3, 4 of 3, but then we'd look for them to go like this for 5 of 3. They need to continue on up. 5 of 3 should target 64.70. However, this could easily just be 3 of 3 still, and we'd look for a pullback into 39. So you're looking for something like this. But overall, they're just doing what gold's doing, which is setting up for the move higher, whether it's a deeper pullback or a flag, 76 being the target. Wells Fargo. Oh yeah, they got hit today, huh? So there you go. Wells Fargo has a really nice, well, not really nice. This first part's ugly as hell. 1, 2, 3, 4, Jeezel, Peasel, 5. Let me redraw that because that's like my daughter drew it. No offense, Bobby, I love you. 1, 2, 3 of 3, 4 of 3, 5 of 3, 4, 5. Really nice structure at the top. The bottom's ugly. Really nice structure at the top. And then you have this ABC dip here. ABC so far. They're going to need to break down below 72 on Wells Fargo for us to start to really be like, oh gosh, bigger top could be in place. And then ultimately they're going to need to break 60. They got to break this low here because this could be a 3 and then 4 and 5 like that. But the banks have had a lot of 4 5s. The banks are close. If we look at XLF, let's look at that one real quick, just since we're talking about banks. That's the 3-hour chart. I know you said daily, but it's the same concept. It's not going to change on the daily. Yeah, the banks off of this deep 4 here, they held. So this is what we're calling 4 of 3 down here. They held for wave 4. And that's at 42. If 42 breaks, obviously the banks are in big trouble, but we want to know that before then. And really where we're going to know is right here around 50. So if you look at all the banks, not all. We saw JP Morgan and Wells Fargo, right? They both have this consolidation period, which is a really nice wave 4, and then a push to all-time highs. These consolidation periods are hugely important to the structure. So 260 on Wells Fargo, 62, I think, or I'm sorry, 62 on Wells Fargo, 260 on JPM, and 50 basically on XLF. These are going to be huge levels to keep an eye on. And I do think that they could be breached soon and quick. You can have the banks doing this and the market doing this for a short period of time, but it's not going to last. So we could start to see that the tell if the market continues up and the bank starts to do this, because all of them are at key targets. If we start to see this from the banks and the market's starting to go to all-time highs, this is a tell. This is something to pay attention to. So just looking here, they're back at 6,300. That's not overly unexpected. The reason being, if we zoom back in, so they came down, they broke a level, and this level is a big one to break, by the way, at 6,300, and now they're back testing into that area, and now we're going to see if they're able to fail it again, and if they do fail it, you know, I think we're destined to at least come down to 6250, 60 area, test that, and then further after that. The other option or thing that I'd be looking at here is this is not the ugliest 5 waves, and then you could look for something like this. This could be an A wave that's 5 waves. It could be a start of a C wave. We have to have more data, and then we'd look for C down into that area. If it's a C wave, if it's a if we're starting a C wave down, we would be looking for a much bigger breakdown. If it's going to be an A, B, C, we're looking for them to come down into 260, then bounce, then down again, or back up from 260. They don't have to go below that, but that's where we'd be looking as the 6260, 6250 zone. Well, Kyle's Mike said in Discord he really enjoyed the live call. I appreciate that, Mike. The more you guys interact and ask questions, the better these calls are. I don't know what you want to see, so I go through what I know has changed in a significant way. So for instance, today, NVIDIA it changed and SMH changed in a significant way, so I wanted to go through those. But if you don't ask questions, guys, the call is going to be pretty short because I'm going to go through ESNQ and whatever stocks changed significantly, as well as, you know, make sure we're all good on gold, silver, and Bitcoin, because those are, I know, heavy investments. And then we're going to be done. So if you want longer, more interactive live calls, half of that is on you, just so you know. All right, guys, happy Tuesday. We'll be back for the close. We'll see how it goes. I'll be live tomorrow. Don't forget, tomorrow is a live day. And then next week, guys, is my birthday. Is it next week? What day is it? 15 days. 2 weeks is my birthday. The 30th. I will probably do some kind of special for my birthday. Next year, I turn 50. So that one will be a big one. We may have a big special then. But this year, I'll probably run some kind of special. So keep an eye out for that. If you want to add the indicator, if you want to upgrade your indicator to the yearly, we'll probably have some discounts. If you want to get a yearly membership and, you know, upgrade to that, we'll have discounts on that as well. So just keep that in mind. Or if you have friends or anybody, family that want to join, tell them they can hang in there for a couple of weeks and get a good discount, or they can join right away. It's up to them. All right. Thanks, everybody. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to our website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. That's because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. We also have our educational material. If you scroll down a little further on the page, you're going to see our indicators, which you saw in the first part of the video, and also our courses. We have our Trade Waves Academy course, and right now I am giving 50% off of this course if you get the yearly indicator. So if you buy the yearly indicator right now, you're getting 2 months for free on that, and then you get Trade Waves Academy 50% off. In Trade Waves Academy, we go over all of the things that are outside of Elliott Wave to put a complete package together. We go over market psychology, capital management. You can see all the modules here on the screen. Options trading basics, candlestick patterns, how to trade price action, bull and bear traps, how to identify market reversals, fib levels and why they're important, how to identify key support and resistance, and trade setups and proper risk reward. All of this comes inside of Trade Waves Academy. On top of that, you get our Elliott Wave for Beginners course included in this price, and you get the Advanced Elliott Wave for free included in this price. So for $497, you get all of those modules I just said, plus the Beginners course, plus Advanced Elliott Wave. It's an incredible deal, and you can get it for half off right now if you get the yearly indicator. Now, as I did mention, we do have our Advanced and our Beginners Elliott Wave courses. In our Advanced course, we're going through a lot of the things we're seeing on the charts right now. A lot of those things are the advanced fib levels, the diagonals, double and triple threes, flats, triangles, trading Elliott Wave, which right there, that is worth the price of admission. People don't understand that there's two paths and how do you trade them if there's up and down. It's because you trade setups, and there are very good setups in Elliott Wave Theory. You have to know how to spot them and trade them, and we talk about that here so that you can understand how to do this course. Now, I understand if this is too advanced. You can see, though, that our traders love it. But if you need to get started at the beginning, we have our Elliott Wave for Beginners online course, and this course is really helping traders understand a complex market in a way that makes sense. It's extremely confusing when good news makes the market go down, bad news makes the market go up. It stops at random places. You don't know what's going on. That's because the news cycles were garbage. Elliott knew this long ago. He knew that key levels mattered. It's not random, and you're able to find these key levels, and this is what gives you a huge advantage over the rest of the market. In this course, you get 25 videos where we go through your introduction. We have to introduce you to Elliott Wave Theory. We have to get your mindset right and give you the KISS method, how this works and why it works. It's very scientific based. People think it's just, oh, you just make a wave up. No, very scientific based. It's outstanding. Chart setup and tools. We go through all of your chart setups, every tool you need to use with Elliott Wave, how to use it and why we use it, and then the Elliott Wave for Beginners area where we go through each of the waves, how to find the key levels, how to understand impulsive and corrective waves, how to know where to get these measurements, the corrective depth theory, the theory of alternation, the pivot, everything you need to make sense of an irrational market. Now, the really cool thing about both of these courses is there's several ways to get them cheap or for free. You can get them both at a $37 discount with our Elliott Wave course bundle. You can get them for free in our Trade Waves Academy course. If you buy that, they are included in that course. Or if you just want to get them at a low monthly cost, you simply get one of our monthly rooms, as the Elliott Wave courses are included in this price. In our first room, the Invest with Jacob room, we give you all of your real-time market updates, all of your buy and sell alerts, all of your Elliott Wave questions are answered. The midday video that you watch in these calls, that's live for everybody in these rooms. And then you get the beginners and the advanced course included in this price. We trade the SPY and the QQQ, and we swing and day trade. So we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as the individual stocks, the futures trading, his income trading method that just kills it, and his reduced risk binary method that gets you in at a cheap price, gets you huge multiples on your money, and it's how he structures that trade that's so unique. That's why you get a 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. Thank you for watching. We'll be back tomorrow with your next market update.